There are a lot of moving parts to why we're seeing a sell-off over the European bond market. What do you think caused it?
I mean, decent economic data, and the fact that yields are still extremely low. I mean,
this is purely economic, killer PMI.
And it's the first day of the year. I mean, I think the first week and a half of the year are always dominated by decisions people made in December. You know, decisions to reallocate portfolios. I think it's perfectly reasonable for European yields to start the year by moving higher. I think it was a general feeling that Europe had a good year economically, and if the data that we get in the first week of January really confirms that, I think there's plenty of room for European yields to move.
Are we in a situation where we're finally going to see, say, short-term spreads meet up to where euro-dollar is versus the other way around that we normally see?
No idea. No idea on that one at all.
But meaning that we've seen the euro gain so much, but we haven't seen yields really catch up to that. Meaning that is the sell-off in the bond market going to be more sustainable? I
mean, I think that the move in the euro has been driven more by the equity market than the than the debt market. There's been no obvious signs of money being reallocated across countries in fixed income. I think in equities, people do feel good about the European economy and European earnings, and I think the euro at 120 is heading towards its fair value now.
So among other things, we had Mr. Benoit Corre, giving an interview over the weekend saying, October may be it for this asset purchase business. Is he saying basically what we all know already? Is he just basically putting words to it, given where the data are?
Yeah, I mean, there's already no need for the ECB to be buying, apart from they're scared that if they said they're not buying tomorrow, the market's going to react badly. But there's no economic reason for the central bank to be as active as it currently is, and yet they don't want to provoke a violent response in markets.
So what does that tell us, if anything, about a rate hike as opposed to ending the asset purchase program?
I think it is, I think 2018 is going to be a year of adjustment in global monetary policy. I think global central banks are going to be considering rate hikes and less asset purchases, and as well they should.
But do you think that actually the ECB might consider a rate hike in 2018? Because I think most people have been saying, oh, no, not until 2019.
I think if data continues to move as it does, and if asset markets could move in 2018 as they did in 2017, then yes, I think they'll bring it forwards.